Once upon a time, Morocco was hailed as a North African economic lion, a beacon of progress and stability in the region. But the narrative has shifted. Morocco now faces a sobering slowdown, a stark contrast to its previous dynamism. The economic landscape is undergoing a significant transformation. After a robust 7.9% growth in 2021, a year of post-pandemic recovery and renewed optimism, the economy lost momentum, experiencing a significant deceleration, with growth dropping dramatically to 1.3% in 2022. This sharp decline raised concerns about the nation's economic trajectory, and despite efforts to reignite growth, the economy only modestly rebounded to 3% in 2023, a figure still below the desired levels for sustainable development. These numbers fall short of what's needed to create sufficient jobs for Morocco's young, rapidly growing population, leading to concerns about unemployment and social mobility. The slowdown is more than just abstract statistics. It's a reality for farmers facing devastating drought conditions, businesses feeling squeezed by rising costs and reduced consumer spending, and a government under increasing pressure to address these economic challenges effectively. Prolonged drought has crippled the agricultural sector, a vital pillar of the Moroccan economy, while global inflation, coupled with rising interest rates, have collectively made life significantly more expensive for everyone, impacting household budgets and consumer confidence. Some sectors, like the tourism industry, continue to show remarkable resilience, attracting visitors and generating revenue, but others, especially the industrial sector, are struggling to maintain competitiveness and growth. The government's policy response, carefully balancing debt management with targeted support for vulnerable households, will ultimately shape Morocco's economic future and its ability to achieve sustainable and inclusive growth. Therefore, understanding the multifaceted challenges facing Morocco is absolutely crucial, not only for potential investors but also for anyone interested in understanding Morocco's next chapter and its evolving role in the global economy. So let's break down the key forces behind Morocco's current economic journey and explore what potentially lies ahead for this North African nation. To truly understand the nuances behind Morocco's recent economic slowdown, we need to delve into the data and analyze the key performance indicators. It's not enough to just look at headlines, we need to dissect the underlying trends. Let's focus on 5 key indicators that paint a comprehensive picture of the current economic climate. These metrics will help us understand the challenges and opportunities facing the Moroccan economy. First, GDP, then unemployment, followed by inflation, next, interest rates, and finally, government debt. GDP growth has slowed to around 3%, a noticeable deceleration from previous years, signaling a sluggish economy and raising concerns about future prosperity. This slowdown impacts various sectors, from manufacturing to tourism. Unemployment has risen to 13%, a concerning figure that reflects the challenges faced by job seekers, with urban areas hit hardest at nearly 17%, highlighting regional disparities in economic opportunity. This disproportionately affects young people and recent graduates. Inflation spiked to over 6%, significantly impacting the cost of living, eroding household purchasing power and squeezing businesses, particularly small and medium-sized enterprises. The central bank raised interest rates from 1.5% to 3%, a measure taken to fight inflation, but this also dampens growth and increases borrowing costs for businesses and consumers alike. Government debt has climbed to over 71% of GDP, placing a strain limiting fiscal flexibility and potentially crowding out essential public investments in areas like education and healthcare. These numbers reveal a nation grappling with both external shocks, such as global inflation and supply chain disruptions, and internal weaknesses, including structural unemployment and limited diversification. High unemployment and inflation strain families, making it harder to afford basic necessities, while rising debt constrains public investment, hindering the development of crucial infrastructure projects. The challenge is to restore growth without fueling inflation or unsustainable debt, a delicate balancing act that requires careful policy choices. Morocco's economic health depends on how it manages these interconnected pressures and implements reforms to foster sustainable and inclusive growth for all its citizens. Agriculture is the very backbone of Morocco's economy, a sector deeply intertwined with the nation's prosperity and the livelihoods of its people. It's a major employer, employing a third of the entire workforce, particularly in rural communities where farming is a way of life. But this vital sector is also highly vulnerable, standing at the mercy of the climate and its unpredictable patterns. A historic drought has had a devastating impact, slashing cereal harvests dramatically from over 10 million tons in 2021. The yields plummeted to a mere 2.5 million tons in 2023, a stark illustration of the drought's severity. This dramatic collapse in agricultural output translates directly to lost income and financial hardship for countless farmers and their families. It also necessitates more food imports to meet the country's needs, creating an agricultural trade deficit and acting as a significant drag on overall economic growth. The loss of rural jobs and agricultural opportunities has forced many people to migrate from rural areas to already overcrowded cities, exacerbating existing problems and worsening urban unemployment rates. The drought's ripple effects extend far beyond the agricultural sector, hurting the entire Moroccan economy. It's fueling inflation, increasing the cost of living, and contributing to social strain and potential unrest. Morocco's vulnerability to the growing impacts of climate change is now undeniably clear. And building resilience in the agricultural sector is not just important, it's now an urgent necessity. The crisis highlights the critical need for increased investment in water-saving technologies and efficient irrigation systems, as well as promoting crop diversification to reduce reliance on water-intensive crops. Building a climate-resilient and sustainable agricultural sector is absolutely essential for ensuring Morocco's long-term economic stability and the well-being of its people. While agriculture suffers, Morocco's tourism sector is booming, welcoming a record 14.5 million visitors in 2023. Tourism revenues topped $10 billion, supporting jobs and injecting much-needed foreign currency. This success contrasts sharply with the struggles of Moroccan industry. Manufacturing and textiles face weak demand and rising costs, squeezed by inflation and global headwinds. Export-dependent industries are hit by slowdowns in key European markets. The split between thriving tourism and struggling industry reveals Morocco's uneven economic landscape. For balanced growth, Morocco must address industrial vulnerabilities while leveraging its service sector strengths. The future depends on diversifying the economy beyond tourism and agriculture. Soaring prices forced Morocco's central bank to act, raising interest rates from 1.5% to 3% between late 2022 and early 2023. The gold curve inflation, which had surged above 6% by making borrowing more expensive and cooling demand. This medicine helped slow price increases, but it also dampened economic activity. Higher rates mean businesses delay investments and consumers hold off on big purchases. The result: slower GDP growth but a check on runaway inflation. The central bank faces a tough trade-off: fight inflation or risk stalling the recovery. The impact of these rate hikes will shape Morocco's economy for years to come. The challenge is to restore stability without choking off growth. As the central bank tightened policy, the government stepped in with subsidies to shield households from rising prices. Price controls on essentials and support for transport workers helped maintain social stability. Morocco launched ambitious social protection reforms, expanding healthcare, family allowances, and unemployment benefits. But these programs are costly, especially as slower growth means less tax revenue. Government debt has risen to over 71% of GDP, raising concerns about future fiscal space. The government must balance supporting citizens with keeping debt sustainable. Every dirham spent now is an investment in stability, but also a future obligation. Morocco's future hinges on tough choices. How can it reignite growth that's both fast and inclusive? The drought exposed the limits of traditional agriculture. Can Morocco invest in water-efficient, high-value farming? Economic diversification is urgent. Industry must become more competitive and innovative. Education, skills training, and cutting red tape are key to unlocking new sectors. Expanding social protections is vital, but how can this be financed without unsustainable debt? Tax reform and smarter public spending are essential for a fair, resilient economy. For investors, Morocco's answers to these questions will signal its long-term potential. The next chapter depends on bold reforms and a clear vision for sustainable shared prosperity. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.